now the fun part begins with Twitter. So Elon officially sent a letter to Twitter's board on Friday that he is terminating the merger agreement. Of course, as expected, and as they should, Twitter's board quickly filed a press release saying that they intend to enforce the merger agreement and agreed upon price of about $44 billion in court. I was going through the filing from Elon and his attorneys, Skadden Arps, basically claiming that Twitter's in breach of the merger agreement, claiming material adverse effect. And this is all centered around the number of fake and bot accounts, which is not surprising because we talked about this before, and he's been very public about his views that there's a larger percentage of fake bot accounts on the platform than what is currently reported by the company. And so the language in the letter is that it is, quote, wildly higher than the 5%. He's also claiming that the company does actually not exclude these accounts in its reported MBAU metric like they state in the public filings. And that Twitter also did not comply effectively with Elon's request for information, at least in a way that Elon deemed satisfactory. So this is going to court. It's going to be really interesting to see how it all plays out. Twitter is expected to file a lawsuit this week. We'll probably get some type of resolution on this by the fall. The discovery process is going to be really interesting because we're going to get a lot of information on Twitter's active account metrics. My thinking here is that Elon is primarily has buyer's remorse, right? And we talked about this as kind of the deal came out is that the 54.20 or the $44 billion price tag is very, very high, especially in light of deteriorating fundamentals, and that, absent any type of deal, we would think that the stock could be in the 20s. And so if we assume that, the stock could basically be cut in half, X deal, so versus the $54 price target of $44 billion, you're talking about a delta of $20 billion. So it's a lot of money on the table, both for Twitter shareholders as well as Elon Musk himself. And so both parties are highly incentivized to take this to court and spend a lot of money. So as always, the attorneys are going to win here. But the best case for Elon is that he probably has to pay some type of breakup fee. That's odds are based on precedent. Again, I'm not an attorney, but from what I've read, it seems like precedent, again, is not in his favor.
The thing I'd say at 30,000 feet about it, I haven't dug through the details of that case, and others will do plenty of that work, but is that they are a sophisticated court, and this is really just, and I don't know that it is, they'll litigate it, if that's just a, buyer's remorse and looking to, try to create a way to get out of a deal, the court's very sensitive to that idea, that kind of a strategy. So, that certainly plays in how they think about these things. The bigger question, too, to me is, what happens if Elon Musk loses this and they say, you got to do it? People speculate, is it just too big to sort of put it all on the line and expect the court to be able to enforce that? We'll see. That's sort of a separate question. But it'll move pretty quickly. I agree with Andrew on that.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.